My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Hey everybody, welcome to My Trading Game Plan. My name is Gareth Soloway, here to deep dive into the market action using technical analysis and data. We're going to find the key trades of the day, what's going on out there, and ultimately project out the likely scenario for the markets, the S&P, gold, silver, Bitcoin, and even other stocks. But the big thing that's catching my attention today, obviously, is the imposition of 10% tariffs on 8 European countries. And that, again, is sending the markets sharply lower. And again, all of these tariffs, these new 10% tariffs that will kick in on February 1st, are meant to strong arm these European countries to backing the U.S. purchase of Greenland. Now, again, we'll look at what the charts are telling us, but you guys know me. I've been talking about the risk of a major breakdown here in the S&P and in the NASDAQ. In fact, we got to close below a key technical line on Friday, and here we are seeing the results of a continuation move lower. Now, doesn't mean the markets aren't going to bounce back. If anything kind of lightens up over Greenland, sure, you'll see a reaction to the upside, but ultimately the damage continues to be done and the charts continue to stay bearish. Let's take a look right now. This is the S&P futures. So again, the futures were trading yesterday, even though the stock market was closed for a portion of the day there. You can see we opened Sunday night lower, traded lower on Monday, and we've even gone lower going into today on Tuesday. Now, we aren't at the lows. We can see down here, overnight, we did get as low as around 68.50, but we have come back up just a little bit. Now, the big kicker is this, guys, the S&P 500 here. We go to the bigger time frame. What do we know? What have I talked about? What have I been warning about? We've talked about how there's so limited upside because based on technical analysis, we know that the markets stopped on a dime at the high end of the parallel and on the low end. So again, if you're a bull, you would buy the low end. If you're a bear, you're shorting the high end. Well, where are we? Right over here, we hit the high end. We sold off. We've crept back up, even unable to reattack that high end. And now today we're setting up for a decent move down of about 1 or just over 1% on the S&P 500. And again, if you ask me here, and this is just common sense, right? Well, which direction has more upside? Well, if we rally from here, we get upside to about here, right? Right into that area. However, if we fall, where's your first big support? I would argue that maybe right here would be your first big support, but your mega support is not until down around 6,100 on the S&P. And so just from a classic technical analysis risk reward perspective, which angle has been recently over the last few weeks the right angle to be? And that's being more bearish, just understanding that, sure, the markets can grind up 0.1% a day or 0.25%, but there's limited upside, literally 1, 2, 3% upside until we hit resistance. Now, could we break through resistance? Absolutely. That can happen, but make the market prove it to you. Too many people go on their gut, their hopes. Oh, they're fully invested, so they're going to just believe what they want to believe, that the markets can go up forever, and that's where they take big losses. We have to follow the charts. It's the only way we can get the odds in our favor. Doesn't mean we're always going to be right, but at least we'll be right a majority of the time. All right. Back to the charts we go here on the S&P. Let's flip over to the NASDAQ chart. This is the one that really is interesting because on Friday, we did close below the trend line. Look at where we are pre-market. We're all the way down into this level here, right? So again, if we look at that, look at this. Not only did we close below, but if we close below Friday's low, and it looks like unless we get a big rally later today, we will be setting up for a confirmed breakdown. Now, there'll be a little intraday support here, but the level I'll be watching is this gap fill at 600 on the QQQ. That will be the first one, followed by a gap fill at 590 on the QQQ after that. And again, the bigger issue here, folks, is number one, the NASDAQ has not made a new all-time high since back in October. So we know that index is weaker. We know that's because the big cap tech names like Microsoft. I mean, look at this nasty chart on Microsoft. Not only did you get this beautiful double top, but then you came down, you hit support, you bounced, and you've now broken that support and are heading lower. And what scares me about Microsoft, and listen, Microsoft actually has some good support around this 447 level, but this big gap, look at that big gap right here. Gaps in technical analysis, the old adage is gaps are meant to be filled. And that tells me that at some point, maybe it's months from now, but at some point we're going down here on Microsoft. And then you look at other stocks. And again, just to reiterate why the NASDAQ has been so weak, look at Meta. Meta way off of its all-time highs here. And look at the trend line going back to 2022 that we now are at risk of breaking today. In fact, when we open today, we will be below that level. Now we have to see where it closes and if it confirms. But again, the risk is starting to mount. Now, interestingly enough, folks, this isn't just the only problems here. So we have the 10% tariffs that Trump has levied starting February 1st on 8 European countries. They go up to 25% on June 1st if there's no deal reached for the U.S. to take over Greenland. But the bigger fiasco here that I think is actually even more of a negative is the interest rate and the bond market. And this is partially all intertwined because as the U.S. kind of bullies itself, other countries out there, what we're going to see is other countries less reluctant, or more reluctant, I should say, to buying U.S. debt. And when other countries don't want to buy U.S. debt, maybe even dump U.S. debt, guess where interest rates go? They go up, right? All right, they don't go down. Doesn't matter if the Fed's cutting rates in May or June or July or whatever as the new Fed chair takes over. That's the short end. What matters is the long end here. That's what sets the bigger time frame. Okay, so when we flip over to these charts, look at the 10-year yield. I've been telling you for the last 3 weeks, it was a bull flag on the U.S. 10-year. There's your result, guys. How many times in this game plan did I go over this pattern over and over again? And now we're seeing the ultimate play out of this bull flag. Great to know technical analysis. It gives you, again, the probabilities can be in your favor versus against you, where they are for most investors. Now, how high is this going to go? Well, we're going to have a little resistance right around 4.35 here. That would be your first stopping point. Again, that's not that much higher. But again, if it breaks through that, we're headed to 4.5%. Now, again, you might say, well, what's the big deal? 4.2%, 4.5%, that's 30 basis points. Well, when you have 40 trillion-ish in debt, it's actually a lot. It's massive. I mean, remember, we're already spending, and this is prior to this move up in interest rates, we're already spending over 1 trillion in interest as a country. You jack that up to 4.5%, now it's probably 1.4 trillion or who knows where it is. That's the issue here. And that's going to bankrupt this country. All right. So again, just things to keep an eye on here. Now, the bond market in the U.S., and this could be a bond vigilante moment. We may hear more and more of that term. But the bigger thing here also is this, and I've highlighted this since we were below 2%, the Japanese 10-year yield continuing to rip higher. Look at this move here. We're now seeing the 10-year in Japan now at 4.35, got as high as 2.35, got almost as high as 2.4%. And again, this is now going to put more and more pressure. And again, I've kind of choreographed this. And the reason why this is a big deal is because we're starting to see countries that have a high debt to GDP ratio, and Japan has the highest of all. We're starting to see interest rates. In other words, other countries, it's getting harder to dump our debt to other buyers. They're demanding higher interest rates, both in Japan as well as in the US. And this is something that as the US debt goes up, it's going to be more and more of a problem. Now, again, you might say, well, how is this affecting me? Well, the problem is when the 10-year yield goes up, guess what else goes up? Interest rates on mortgages here in the U.S., interest rates on other loans, they're all tied to the 10-year yield. And so it does have an impact. Even if you don't think the debt matters to you in your daily life, which, listen, we all going to have to pay this debt at some point, but it's more on a day-to-day basis in terms, even in credit cards, right? In credit card numbers. So, President Trump has tried to cap at 10%, but with interest rates going up, there's going to be more and more pushback on that as well. All right, lots again to discuss. Couple other charts on my radar today. Palantir Look at this trend line here. By the way, look at this one, how it was support, 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 broke, and then resistance, resistance, down to support here. Second hit, third hit, we may be on the verge of breaking on Palantir. So again, there's a lot of charts here. Look at Robinhood. Robinhood is now nearing $100 per share. I said this was going to get here, folks. I will be watching this level to trade today at about $100. There's a gap fill right here at that level. That'll be something that I pay close attention to. Now, there are some stocks that are meme type craze stocks, and they are still seeing money flow. For instance, Micron, SanDisk, these ones, because they've been the biggest winners out there, money, the meme craze, kind of the retail player is continually pumping money into them. And so if we take a look at this, so SanDisk today, for instance, it's barely down. It's only down about $6 on a $400 stock. That's not much, folks. We're talking in the realm of 1.5%. Micron, take a look at Micron here. MU, look at this. It closed at 362.75. It's trading at 361. My cautionary tale here is, you guys know, I'm a technician. So I don't care what the news is saying. I don't care about, oh, this super cycle of this. To me, I hear blah, 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 blah. What I say is, well, what are the charts telling me? Because I've heard blah, 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 blah before, and I've listened to it, and I've lost money. So it's the narratives, it's the spin, it's the institutions needing that exit liquidity. Like, when does it become a real story and then flip over into exit liquidity mode for the institutional money, where they just want to push that on social media so we get all piled back in at the highs and then the rug gets pulled? And that's why the charts are so absolutely important. And so for me, this is a concern. I mean, this is an amazing trend line. Look at how it literally connects through all of these highs right here and then right here. Now, listen, doesn't mean it can't break through, but at least I go on cautionary mode as an investor and trader and say, wait a minute, this is up into a level. I'm not going to, chase and be part of the sheep and follow in to the slaughter, essentially, right? Potential slaughter, I should say, because we don't know for sure. All right, let's flip over to the metals. Wow, gold is ripping higher today. Now, why would gold be going higher? I think it's pretty obvious, right? Gold is a safe haven asset. And gold, with what's going on geopolitically, it's just more stress on the system, right? So it is pushing money into the safe haven demand for gold. To some extent, silver, but I'm a little bit more nervous about silver, as I have been, and I'll show you why. So number one, on the gold chart, what we have here is a breakout above this trend line. Now, granted, it's unconfirmed, but let's see where it ends today and where it goes tomorrow. But if it continues, what's been my upside target that I've told you guys about? Right around a Pierce of 5,000. How do I get that? Simply take a parallel from these lows, stretch it to that high, and we bring it up and look at where the high end right up here is, right on a Pierce of 5,000 per ounce. So if we continue up, which is possible if this, rhetoric and threats and all this stuff continues, then you're upside again on gold till your next resistance is 5,000. And let's be clear, I still think gold eventually goes to 10,000, but at some point you're going to have pullbacks, just like we've seen in the past, right? I mean, here was a great move on gold, and then it pulled back. And now it's made its way up, and maybe it goes here, and then you get a pullback, right? So it's a stepping stone, 3 steps forward, 1 step back type scenario. Now, if we flip over to silver, this is what has me just keeping an eye on it, right? Is just monitoring this parallel on silver. Now, the one thing on silver, it's very close to $100. Sometimes when you get close, there's this need to push and touch $100. So I do think we have to give that a possible scenario. But as a trend line goes, you have this upsloping parallel, and that again is just keeping me on alert right up here. And you can see what happened. We hit it right here, and we had a little bit. I mean, it was really small pullback, but it was a pullback until we got the latest news that these new tariffs were coming in to these European countries, right? And so again, keep an eye on this here. Let's see if it can really burst forward. Then I do think $100 is doable, but let's just monitor this level. We're right now above it. We'll see where we end. Now, flipping over to oil a little less crazy, right? Oil is up today. You guys know I've been bullish on oil since before the breakout, saying it was going to come, and we did get it. Then we got our pullback. It's starting to creep up again. I actually think that regardless of if we still go down a little bit more, I still think oil is going higher. Rotation of money, especially when silver does finally pull back, I do think money will look for an asset that has not had a big run. And there's really not many anymore. Stock market's basically near all-time highs. Silver's at all-time highs. Bitcoin has come in substantially. I think some money rotation went into silver from Bitcoin, so that could recover a little bit. But really, oil to me, look at this on the chart, how low this is. Speaking of energy, I've been alerting you guys that natural gas was due for a pop. If you combine yesterday's when it was open to today's, over 20% upside in just a matter of 2 days. Incredible. From Friday's close, look at this, 30% move in natural gas. That, my friends, is an epic move. I did unload my natural gas today, just to be clear. I'd be stupid not to. When you get, listen, the old adage is don't look a gift horse in the mouth. In other words, if someone gives you something, you don't be like, oh, but look, the teeth are rotting, I don't want it. Like, you're just like, thank you. When you get this type of move, at least for me, I took my profits. I said, thank you very much. It's also on a technical basis, basically into resistance. Look at this. See this little pullback low right here? And if we just look at that and we drag that trend line across, we should be into some resistance right in here as well. And by the way, I still think on a pullback, I'll look to rebuy because my thesis for the longer term remains that these data centers are going to have to be powered by something, and they're not going to be allowed to be powered by the grid. They're going to have to go out and purchase their own LNG, their own natural gas. It's relatively cheap to run the data centers. So I do think that there's going to be further upside down the line. But at least in the near term, this type of move is epic. I mean, that is 30% in 2 days on nat gas. What a wonderful way to wake up if you're in the UNG or Boyle today to see those type of gains. All right, let's go to Bitcoin, guys. Touching on Bitcoin here. Bitcoin daily chart, we're seeing it curve back over. I think, again, what we have to recognize here is what structure is forming. We still have a bearish flag pattern forming on Bitcoin. It hasn't broken yet. But again, watch here because listen, I've been neutral to bullish. We got almost to my target. My target was around 98 to 100,000. We got to 98 right here. The idea was it was this upper trend line is your maximum. We've now curled over. We have to monitor this. Now, until it breaks, that's still support. We still respect it as technicians. But if this breaks and confirms, this is headed back to 80,000. And if that breaks, you're headed all the way down close to probably 70, maybe low 70,000 range, these pivot points. So keep an eye on this. And by the way, one thing this does alert us to is that Bitcoin, as much as it wants to be a digital gold, and I still think it will eventually get to be a digital type gold, it's still reacting to fear right now, right? Gold's going up in a safe haven asset, and Bitcoin's been going down the last few days since this news broke. And so we just have to be honest with ourselves. As much as I do think it'll morph eventually, and some of you guys may disagree, what it is right now is a risk asset, and it's coming in on deleveraging. All right, guys, I got to get going to my trading room. It's going to be a fun day today. Thank you guys so much for tuning into my trading game plan. As always, I try to bring the insights, the knowledge, and the trade setups to you guys. No BS, just charts and data. That's what is here and what we're all about here at verifiedinvesting.com. Have a great rest of your day, guys. Thanks for tuning in. Take care.